You know, I think back to December when we had a conversation about how this year could have been the year for DeFi. It was actually the top pick you had for this year. Now, fast forward 6 months, how do you feel about that part of the industry at large?
Not great. Listen, you have to hold crypto in context what's gone on macro, right? And we talked about there were going to be headwinds this year because the Fed was going to have to withdraw liquidity. And so assets that went up based on cheap money forever, if they're growth stocks or expensive watches or crypto, were certainly under pressure all year long. What's exacerbated this move in crypto is, a bunch of leveraged players that had far more leverage than I think people thought. And so you can talk about Celsius or 3 Hours Capital. That's caused almost something similar to what happened in 1998 with long-term capital management. Alleged, market neutral players with monster leverage, and that's being unwound. And that's created a ton of fear in the space. And so you've seen lots of credit being withdrawn from the space. And when credit's withdrawn, you've seen prices collapse. And so I had hoped this year was 30,000, 50,000 Bitcoin. And once we took out, 30,000, 28,000, we've cascaded. 20,000 is a pretty good target with 1,000 on Ethereum. We've tested that 2 days. When I look at the U.S. stock market, it looks like it's got probably 4% more to go to 3,500, which is where the 200-week moving average is, where support comes in. And I think you're seeing this liquidation of risk, and crypto's got caught up with it.
Mike, tough question, but did you directly have any sort of exposure to those counterparts that you mentioned, the likes of Celsius, the likes of 3 Arrows, or is it more third order effects that you gain the exposure, and is it systemic?
Yeah, you get exposure indirectly from any big player in the space, right? And when you have really big players that have borrowed money from all over the place, it creates this daisy chain effect. And I think that's burning through the system right now. My sense is it's mostly burned out. Like these fires go until they run out of oxygen. And so, you'd have to be one heck of a diamond-handed player to have sustained all of this if you have too much leverage. And so my guess is leverage has been knocked out of the system. But Humpty Dumpty doesn't, get put back together right away. It takes a while to kind of sort through. There'll be bankruptcy proceedings in many companies. And so I think while we should bounce off of 20,000 and bounce off of 1,000, it's going to take a little while for crypto to regain a narrative and regain confidence.
We'll talk a little bit more about that confidence, Mike. I mean, crypto, like any other risk asset out there, is largely built on a certain degree of confidence, a certain degree of faith, at least in whatever bet you're making with regards to direction. There are a lot of people that have gotten tripped up by the recent sell-off here, people who are relatively new to this space, people who maybe weren't as deep-pocketed as somebody like you. Do you think those type of people will find their way back to this, or is this just going to end up being a one-off experiment for them?
I looked at the chart of Zoom this morning, right, which went pre-COVID all the way from 100 to 550, and it's back to 100. I still use Zoom 30 times a day. And so what happened with lots of great technologies, including Bitcoin, crypto, Web3, is prices got ahead of themselves. I don't think Zoom is going away. I don't think crypto is going away, right? And so you'll rebuild a base in price. You'll rebuild a story. Bitcoin is still owned by over 130 million people. And so 130 million people see it as a viable place to store some of their wealth. I don't think that community is going away. This is, we deflated an asset bubble, and we're still in the process in some parts of the market.
Do you feel that there are some zombie companies out there who in a rising rate environment won't survive?
I think within the crypto ecosystem, there are plenty of them. A lot of these, each cryptocurrency or crypto token represents a community or ecosystem. I think on a go-forward basis, people are going to really look for the utility that token provides. That was my investment thesis in 2019, 2020. In post-COVID, what happened is everything went up. And, ecosystems that weren't providing a lot of utility sometimes went up more. it reminded of the equity version of that would have been GameStop or AMC, right? Almost identity investing. We're investing just because we are. And that community became really rabid. And those things I don't think come back as fast.
What about regular way hedge funds here? Because it's not just crypto hedge funds that have levered up. You're very close to a lot of hedge fund managers in the community here, and a lot of them are feeling a lot of pain in this market. Do you think that some more won't make it through?
I think a lot won't make it through. Listen, the simple math is if you're down 50%, you need to make 100% to come back before you get management fee, or before you get incentive fees. And it's hard to keep investors with you. It's hard to keep employees with you. And so lots of hedge funds, lots of crypto hedge funds and TradeFi hedge funds will decide at the end of the year before that to kind of fold up shop and restructure or do something else. And so you'll see a washing out of this industry, right? That's just that happens in these big cycles. It happened after 2008. It will happen this time.
Mike, some people say this time it's different in comparison to, say, the 2017-2018 crypto winter because of the institutional players that came in, because we now have Andreessen sitting on more than $4 billion to put to work in the crypto ecosystem. Is that institutional money remaining resolute? Do you think that it will still be there to buy the dip whenever that happens?
Yeah, well, listen, I mean, after 17 and 18, crypto kind of bounced a little bit, but it was really COVID that gave it its excitement and its acceleration. I 100% think there are people on the sidelines waiting to buy. I think the first buyers actually from the traditional sense are going to be big global macro hedge funds. The moment the Fed flinches and says, oh, we've raised enough, we can't do it anymore, I think you'll see lots of traditional macro funds who've had a great year buy Bitcoin. We'll add to our position at that point. One of my partners was just in Europe. A lot of the European institutions weren't in yet, so they're looking at this as an opportunity. And so I don't think most people don't think that the technology that blockchain provides, that Web3 provides, that unique digital asset provides was a flash in the pan.
Mike, I feel the need to ask you a question that we're getting from a customer, actually, a Bloomberg terminal customer, who wants to know from you, why would you use a 200-day moving average here after the Fed funds went up 25 basis points for 30 days before the rate hiking cycle started? So how do you kind of recalibrate here with the 75 basis point hike? How do you recalibrate given that we're in a new paradigm? Listen,
I think what the Fed said really clearly was, and we've been talking about this for a while, when you have inflation as strong as we've had, you need to put the economy in a recession to stop inflation. And what Chairman Powell said yesterday very clearly is, I will put the economy in a recession to stop inflation. Even though I have a dual mandate and I had talked cheeky about trying to get a soft landing, guys who have done this for a long time realize a soft landing isn't possible. And so the economy is going to go into a recession. It's going to go into a recession fast. You saw housing starts today, they collapsed. You're going to see the economy just screech to a halt. That's what the Fed needs to do to get inflation down. And so we're going to go through this awkward period where growth is going to be rolling over and inflation is still going to stay stubborn before it rolls. When the Fed sees it rolling and they signal the pause, then you'll see crypto take off. You'll see other assets follow.
How much of a correlation, Mike, do you see right now between crypto assets and the broader markets, equity markets, particularly here in the U.S.?
I see a big correlation, right? But they went up for the same reason they're coming down. They went up because there was lots and lots of liquidity. They're coming down because the Fed's taking liquidity out. I do think you've beaten things down enough, and on a go-forward basis, that correlation might break down.
Right.
But if you look back, gold led the market in 1974 before equities, because equities are going to have to deal with worse earnings, tighter margins, and bad growth.
Well, I am curious, though, Mike, is it more advantageous for you and other investors like yourself to have a higher correlation, or do you want that correlation to sort of narrow a bit more than what it has so far?
Well, listen, in the long run, you'd certainly like a breakdown of the correlation, because then you can really convince big institutions that Bitcoin provides a lot of diversity to their portfolio. It had literally up until COVID, which was kind of interesting, right? Bitcoin was its own story. It's hard to not underestimate the huge impact that the response to COVID had on all assets. We pumped so much liquidity in the markets. It was crazy. We'd never seen anything like it, right? We were throwing $1 trillion around like matchsticks. And so that broadly drove correlations to one in every asset. But if you looked at Bitcoin before COVID, it was not that correlated to the S&P.
When you take a look, just circling back to some of more of the crypto firms that we've been following, we mentioned Celsius as one. Do you see that as a sort of run on the bank scenario?
Listen, firms like Celsius had worried me in that they took in consumer deposits, which are short dated. They lent long dated, so they had an asset liability mismatch, and they were highly leveraged. Like, those are the things you should be worried about. And so kind of, if you think about the regulator's job as to what they should be worried about, that's who they should have been worried about. And so, yes, it was a run on the bank. Consumers wanted their deposits back. They had credit risk to a very highly levered bank. And, that ended in tears. And so it's funny, we part of the crypto space is really transparent, right? It's on chain, you can see it.
Right.
And then there's these in-between companies that are in the crypto space that aren't all transparent, and you really need to understand who you're investing with.